Hi friends, Simit here from informedtrades.com. In this video, I want to talk about some of the intangible factors involved in investing in mining stocks. This is the next video in our series on investing in mining stocks. If you haven't seen the others, I recommend checking them out first. Okay, the key points, the key intangible factors we'll be covering in this video. Management, the people that are actually running the company. Other investors who suggest the company's financial ties and who may be able to help in terms of helping the company negotiate deals as well as push the price higher. And jurisdiction that the company is, which affects how the government may help them or hurt them, their operations and their value on their shares. Okay, management. The main thing you want to look for when you're looking at the management of these companies is their experience and their network. On the screen right now, you see the logo of KC Research, the next 10. Basically, KC Research, tries to identify who are the best managers in the resource industry. They have the idea that 4% of the executives generate 64% of the returns. Maybe one of the easiest ways from this perspective to invest in mining stocks is to just focus on the great managers with a great track record that have the right connections, that come from the right background. When you see executives that have a track record of success, that come from the right have connections at successful companies, it suggests that they'll be well positioned to succeed in this venture, the company they're currently at as well. Smart money investors. On the screen right now, you see Eric Sprott, who's the founder, head of Sprott Asset Management, a billion-dollar fund. Sprott himself's a billionaire. These guys have a lot of money, so that's an example of smart money investors. Another example would be a major in the mining industry. So if I see Gold Corp or Newmont, for instance, those are companies with valuations greater than 25 billion. When I see them or when I see Sprott, that signals to me that they have some serious money behind them, investors that have serious capital that have the potential to introduce them to others. For instance, if you have a major shareholder like Newmont Mining, for instance, maybe they're positioning a buyout, or maybe that sets the stage for some type of a joint venture. Like as the same case with an investor like Eric Sprott, that's that suggests that additional rounds of financing may be possible. Sprott is a big network that introductions can be made. Basically, it shows that the firm is connected, and that's one of the themes that management you want to look at too. Does the management have connections that indicate success? Do the investors indicate success? Smart, powerful investors also can help drive the stock up, right? So they want to see a return there. When you have investors that have a lot of money and that are committed to a company, that sort of strengthens the potential, of the stock as well. If the company is an island unto itself, it's not really connected to any success, it doesn't have big investment backers, that can sort of be a warning flag in a way, especially if it's a small, very tiny market cap company. Third issue is jurisdiction. Canada is sort of the real hotspot. On the screen right now, you see, world's top mining jurisdictions, according to, or this one's published by KC Research. The source is from the Fraser Institute. In the top 30, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 of these are in Canada. So 10 of the top 30 are in Canada, Yukon, Alberta, Quebec. One strategy in this regard is just focus on or limit yourself to the top jurisdictions. Other places that have riskier jurisdictions can impose taxes, can nationalize it. There's big concerns about this out of Argentina. Recently, this is February 2012, some mining companies or African companies have stated that they'll impose higher taxes on mining companies. So this is something to definitely think about. Being a shareholder in a great company is not so great if the government's going to come in and take it all. Likewise, a lot of these jurisdictions that have if it's a stable jurisdiction, that suggests they're no problems with roads and electricity at the mining operation. So the jurisdiction, knowing the jurisdiction and what type of risk is important as well, especially in some of these smaller jurisdictions. If, for instance, a number of companies in Africa, mining companies in Africa, have official relationships with the government. So they brought the government in as a partner. That can help a lot too, in terms of there's less of a risk there in some ways. That's about it. If you have any questions, want to discuss more, join us over at informedtrades.com. Thanks and best of luck in your trading.